Good morning everyone. Guys, what's going on? Yesterday we had the Fed reporting the interest rates in the US, and the markets they start for a while appreciating the US dollar, but then they dumped it so badly. Let's start with the Euro US dollar analysis today. What did we have pointed out during the week is this bullish engulfing order block, and the price tested, of course. It moved to the upside a little bit, but remember guys, we said, and I think someone asked me, it was on this webinar, and someone asked which one am I trading when we have two order blocks, the one under the other, and I always say the second one, or when we have one above the other, I take the top one. Why? Because it's you get filled in better price, and yeah, it's more advantageous. So from the event yesterday, the price found support here in this 4-hour bullish engulfing order block and bounced to the upside. It left behind this gap that at some point we expect the price to fill it up. Right now, where it's going to be that turning point, that reverse, I believe it's going to be somewhere here at this R1 resistance, about 1.097. I think that the price is going to start selling off from this point here. Now, I'm not 100% sure, but that's what I estimated. Any questions on this one, guys? So for today, we are fairly bullish on the majors, of course. Bullish. Let's put it better. Let's state it better. We are bearish on the US dollar. Okay. Let's check the gold quickly. The gold broke above this all-time high, 21.94, and now is trading at the 22.10 US dollar. On the monthly chart, we can see that the price is just moving higher and higher and higher. On the weekly chart, already created this bullish engulfing, and on the daily chart, scrolling down, it found the support here and it pushed to the upside. Okay, on the 4-hour, we had this rectangle drawn here from the beginning of the week, and we said that if the price is going to move below and it's going to tap into this bullish engulfing order block, we might going to see push to the upside, but it didn't really move away from this S1 support. It just pushed to the upside aggressively, which is fine. The uptrend on the daily chart resumed, and since the early Asian session, the price, it moves higher, makes higher highs and higher lows, and the lower the time frame you go, the more opportunities you're gonna find, tradable opportunities like trends. US oil daily chart, price closed with this ring high formation. On the daily chart, it is in an uptrend. Here it's the uptrend. Price makes higher highs and higher lows. With this high here, a monthly resistance around 83.57 to be the swing high, and the low right at the 50 period moving average, a weekly low around 76.77 to be the lowest. So that's the impulsive move. What do we expect afterwards? Well, if the price will tap into this area of support, we might going to see push to the upside. But again, there is a lot of supporting factors right here, but also this there are some inside areas of support down there. Now, if we go down to the 4-hour chart, the price, if the price breaks below this trend line, it will be the development of the head and shoulder pattern, and from the breaking point to the highest point, we double the distance and we're going to be somewhere there. So maybe this 4-hour bullish engulfing order block won't hold, and better to refine it as the time we speak. So this one here, it won't be the most important area we will be looking on the chart, rather than something down at this point here. So price, it has left behind this tail. So I will be looking to take trades right here. Okay, so let's mark it on the chart. What's going on the hourly time frame? There is another strong area of support down here. Extremely valuable. And that's on the hourly. So you guys gonna decide which one you want to trade, if you want to trade anything. Okay, so you have the analysis for the WTI as well. Continuing with the majors, we marked this bullish engulfing order block on the 4-hour time frame on the Australian dollar, US dollar. The price on Thursday tapped in and bounced off, moving upward. Since then it didn't retrace backward. For other traders, they might want second confirmation. This bullish hammer left behind this tail that can be used as another order block area. If we scroll down to the hourly time frame, here is this bullish order block. It's not very well defined on the hourly time frame. On the 15-minute chart, price started making consolidation here, then move to the downside, start making higher highs, and down there possibly will have been some area for opportunities, but again, you don't know how much and how far the price will retrace to place your order. So I suggest not to be that much aggressive and just take it as you see it on the time frames. Okay, sometimes it's not worth to try and squeeze the last pip and just be the trader who is going to take the last move on the bounce, okay, or the last pip on the decline. So fairly bullish on the Australian dollar, US dollar. The Kiwi, again, that was very, very much clear on the daily chart. This support, nope. Let me help you a bit here. So the support down there, come on. That's a weekly low. Also, that was another weekly low, and we define this area of demand. And on the 4-hour it was. So on the 4-hour we had this low point here from this bearish candle, from this bullish candle, and the price tapped in here again. I don't know if you guys took any trades here with where you have placed your stop loss. I usually take the numbers from the ATR. If I trade on the 4-hour time frame, I always use the daily ATR for my stop loss. So here it was about 47, and even with 40 pips stop loss, that would have been a good trade. Okay, for some people maybe 40 pips stop loss it's not appropriate, but for swing traders it's very, very very good, because you trade on the 4-hour charts, but on based on the daily price move. Now, if you are trading on the lower time frames, of course, when we trade the 15-minute chart, the 5-minute chart, we prefer to have a stop loss around anywhere between 6 to 12 pips, okay, on the majors. Now, there are different styles of trading, and regardless if you don't trade swing trading, at least you learn how to use the order blocks and you go to the lower time frames to refine your entries. Next one, pound US dollar. Here is a 4-hour bearish engulfing order block. The price, let me walk you through from the daily, because of this inside candle on the 4-hour chart. We had this one here. Now, am I interested to take trades from here? Absolutely not, because to take trades from a 4-hour order block and to look for the reversal for the market turning point, it's not a high probability trading methodology. If you're gonna look for the 4-hour chart, it's better to go on the 15-minute to refine. For example, here we see that a good opportunity might gonna arise on the pound, at least temporarily. Somewhere here will be the take profit area. Price breaks below this low here because already it took the previous swing highs high. So some people, they call it buy side liquidity. I call it failure, non-failure swing high, which it's the same thing. Price, if it's going to move lower and take this low here, then maybe we're going to use this order block to take some intraday or scalping setups at this point here. Price is going to move lower, it's going to tap into here, tied its stop loss, and it's going to give maybe 2 or 3 to 1 outcome if it's going to play out well. So if you are intraday trader or scalper, or you like this approach, keep that in mind. And again, why this one? Because we start looking on the 4-hour order blocks, okay? But if you, again, I repeat, if you look on the 4-hour order blocks to trade the 4-hour chart, it's not a high probability opportunity. You better look for the daily to enter, or the weekly to enter on the 4-hour time frames. Next one, USD Canadian dollar. On the weekly time frame, the price got stuck here, and we marked the monthly high, as you see on the right. It's been ages that we have this on our chart, okay? The price, we took trades multiple times at this point here. As you remember, price the last few days retested again this area, and on the 4-hour it looked like this. So if you guys, for example, you saw this one, and remember I told you on the live that I didn't get involved with this one. It wasn't planned from the week earlier, and the price made this bearish engulfing, and the price start moving within the bearish engulfing, and for 4 trading periods it didn't break to the upside, so we expected that most likely it's going to break to the downside. Now in these occasions, always stop losses, I prefer the stop loss to be above this high here, so as high as possible you can get filled in the trade. That will have been beneficial. For now, we do expect some kind of bounce from these lower points. There are many support or demand areas down here to fill up some of this unmitigated or gap. USD JPY daily chart. Here it's the monthly all-time high, 151.72 or something a little bit 152, just below 152. The price yesterday experienced some reaction from this high here. The lower the time frame we go, the more detail we will see. And yeah, it got sold off. Now if it's going to change direction and if it's going to decline and move lower and continue moving downwards, we don't know. But what we know is that the price at this point here, and it was something I was watching, to be honest, yesterday, the price moved to the upside, make a new high. This high here higher than this high, and this low, it's higher than this high and it's higher than this low. At this point, a new high made here, so we mark this low as the support. Price broke beneath that and it retested these areas of resistance here. Okay, so it pushed to the downside. I didn't take any trades. I was just very curious to see how the market will react around this 150 to, let's say, all-time high on the USD JPY. And the rest, pound JPY in an uptrend, euro JPY in an uptrend, looking for bullish opportunities, okay, on some retracements. On the New Zealand Canadian dollar, I got a losing trade here, so I'm not into this trade anymore. Bitcoin, guys, we had this order block, remember, when we said that we expected the price to move to the upside, and it did. So let's see what's going to happen. I believe that it's going to keep rallying. I don't see any reason to decline. Same with the Solana and the Ethereum. Let's see what's going to happen there. So pretty much bullish on the majors today. That's going to keep us busy. And for intraday traders, selling off of the US dollar due to the interest rates yesterday. Temporarily, if we see the pound US dollar to the downside, remember, wait for the market to turn, lower highs and lower lows on the 15-minute or 5-minute chart before you look for some short positions. Temporarily, okay, use the intraday supports like this one here and that maybe like this one here. So don't be that aggressive and demand to go for too much reward to risk. Okay, everyone, thank you for tuning in. I hope we continuously adding value to your trading development. Remember, here at MarketMindsMastery, if you need some more personal assistance like coaching or any more, if you have questions on anything with your trading, you can visit the website here. You can book your free introductory session with me. And yeah, I will look forward to see you tomorrow, Friday, yep, same time here at our YouTube channel. Thank you so much, everyone, and have a great day.